Welcome to the Silent Trading channel on Tuesday the 23rd of June. Today we'll be going through the gold chart to check and see if it is going to form a bullish price action right now, or is it going to dump any further, right? But before we guys start, please subscribe, like, comment and share if you like this video to support me in my trading journal. Okay, so first thing first, we're going to be starting to look at the daily time frame or the daily chart. As you can see on the daily chart, chances are that the daily time frame has a chance of forming a bearish price action over here, right? But we also anticipate for the chart to close as a bearish candle and tomorrow open and close as a bullish candle by tomorrow, and then start forming a bullish price action, or what you guys will call a bullish reversal, right? But we do not cling on to hope. We read the chart based on what it is telling us, what it is trying to do, right? Is it trying to accumulate buy side volume? Is it trying to accumulate sell side volume? And then will it dump or spike up to take out all of those volume before going on its initial trend, right? All of these things, we do not lie to ourselves, right? We read the chart based on what it is trying to do, and then we analyze, right? We dismantle the whole thing the chart is trying to tell us, and then we get a vague information of at least what the chart is trying to do right now, what the market is trying to do right now. And if we can anticipate that if there are more buyers and sellers on the market, right? If there are more buyers or there are more sellers on the market at a few specific moments, you're going to be able to understand that the chart is accumulating that side of the volume, so you're not going to be the one entering a position on that side, right? So if the market is accumulating buy side volume, you are not going to be entering a buy side position, right? For what you guys may call it the sell side or buy side liquidity, but I'll call it volume, because volume is the order, is the position, right? Volume is a number of trade, and not just the number of trade, but the size of the position in a chart, right? So if the market is accumulating buy side volume or buy position, it is gonna dump. And as I've told you guys before, if it is moving in a sideways down fashion, or if it is tumbling down, right, a slow descent down, it is accumulating buy side volume from support that is formed beforehand. And once it has accumulated enough buy side volume, it is gonna dump. And as you can see, it has already dumped, right? And dump to form a wick just below this support over here, right? Which is a key level support, because it is a support aligning between the daily and the 4-hour time frame, correct? Support aligning between daily and the 4-hour time frame is a key level support, because there will be traders waiting to trade on both time frame at this specific support. So if price push down just enough to not attack this support, it is telling us that it has a chance of reversing to the upside, right? But if price pushes down and attack this support once, it has already accumulated volume, and by accumulating volume, it is telling us that once it attacks this support once more, it is gonna dump, right? Because every single time the market attacks a key level support and resistance, sometimes by attacking key level support, it doesn't mean that it is gonna accumulate buy side volume or buy side position all the time. Sometimes it could have accumulate sell side volume at the same time, because there will always be people or traders placing sell stops instead of buy limits, right? Because those are traders playing on a breakout. So traders playing on a breakout are gonna place sell stop instead of buy limits, and traders buying at support and resistance are going to place their buy limits. So when price attacks support and there are more sell side volumes accumulate, right? There are more sell side volumes accumulated than buy side volume. The price is going to pull back, right? It is going to bounce to take out those sell side volume first. Because why? Because sell stop traders place their sell stop would also place their stop loss above their orders. So chances are that price are going to bounce back to take out the stop loss first before pushing down and then dumping further. Correct? So when we know that the chart is trying to accumulate, we do not enter a position until it has accumulated enough and then dump, or either it has accumulated enough, right, and then start forming a reversal. And once a reversal is complete and becomes a valid price action, we are going to be buying at that next candle retest or retracement, right? So as I've said before, right, I've said from yesterday that chances are the price may come down, right? Chances are that price may come down to the lower border of this triangle formation that I've drawn. And if you're going to be entering a trade, enter a trade just above this support over here, because if price push down while not attacking support, has a chance of pulling back up, and that will be the best spot for you to take profit from your position, right? So for those of you guys who has acquired a position at this spot over here, congratulations. But for those who haven't, start learning, start absorbing more information, because every single information that I've given you guys is priceless. I may start opening a course with charge. Right now I'm not charging you guys anything. I'm giving all of this to you guys for no charge, but in the future I may charge something, because priceless information wouldn't be given without condition, right? Good information will also be worthless if passed on to the wrong people. So I want to pass all of this information to the right people. If right now that I'm giving out all of this information and you guys do not care about it, in the future I may charge something for it. I may become a coach, a mentor, that will have to charge you guys to learn, to take out this information from my head, because a good information would be worthless in the hand of someone who do not understand it, in the hand of someone who do not see the worth, see the value in it. Okay, so as I'm giving out right now, do absorb some of it, because along the way down your trading, you're going to be needing some of this information. You're going to be remembering what I have said right now, right? What I have said in the past, because when you start trading, you're going to be seeing some patterns that you do not understand, that you may understand if you remember what I've said right now. Okay, so on a daily time frame right now, it is not suitable to be entering a trade, right? If you entered a trade already, that's good. Wait to close off that position on profit, right? Because every single position that I've told you guys beforehand is all a position for profit. I never enter a position for the drawdown. If it is really needed to be going to drawdown, I'll make sure I'm able to manage that position. So which means before I even enter a position, I've already calculated my drawdown size, how much I will need to manage if my position has to go into drawdown, right? I anticipate my win rate and my losing rate before I even enter a trade. And if my position is losing, what can I do to manage this position? What is a solution that I could use to close this position at break even? Every single thing that I've analyzed is to analyze how I will solve the problem if something comes up, right? I do not calculate only the profit of risk to reward ratio of 1 to 10, 1 to 5. Nope. I even calculate how much I'm willing to lose and where is the spot that I'm willing to cut my losses, or is there any spot that I can average down, open more position to close that bad position at break even, right? I anticipate and calculate all this before I even open a position, which means every single thing happening on my position is still in my control, right? If it spiral out of control, I still have a last minute resort, right? I still have my last resort to managing that position, which I am not telling you guys right now. Because why? Because if you're not past the beginner and the amateur phase yet, you're not going to be able to understand that last minute resort of how to manage a position at the worst possible spot, right? So right now, if you're going to be entering a position, you wait for this 4-hour candle to close a bullish candle and then buy at the next candle retracement or retest. But as I've said, chances are that price has a chance of pushing down to form a new low even below this support over here, because this is a key level support. If the chart is going to dump down once more, this key level support wouldn't hold on any further, right? So if this key level support wouldn't hold on any further, the next thing the chart is going to do is it is going to form a new low even below this candle wick over here, which is why I'm still placing my buy limits over here, because chances are that price have a quite high of a chance to break below and then form a new low over here before it start forming a bullish price action at this new low, and it may or may not be a strong bullish price action next. Okay, so that is all I'm going to be here analyzing for you guys for today, and I hope and I look forward to seeing you guys tomorrow. Do come to get some information from me, absorb as much as you could, because all of this information are free of charge only for some time limit. In the future, I may charge something for all of this information. I may create an ebook to sell to you guys. I may make a slideshow to sell to you guys, explaining all of this information, but all of it wouldn't come at no cost any further, because good things are meant to be free, because people do not value the things handed to them on a silver platter, right? So all this must come at a cost for you to cherish it, for you to value it. Okay, and for today, I'll see you guys tomorrow. See ya.